More than 80% of traders break discipline when under pressure. Over 70% exit winners too early. Over 90% hold losing trades longer than they planned. More than 60% admit they never follow their own rules. And nearly all traders who blow their accounts say the same thing afterward. I knew what I was supposed to do, I just didn't do it. And that, as the old saying goes, is the difference between knowing the path and walking it. But the real question isn't why traders break discipline. The real question is why you feel something inside you pulling you away from the plan you promised yourself you'd follow. That silent tug, that hesitation, that sudden shift in your thinking when the candle starts moving faster than you're breathing. This is where confusion begins, where curiosity rises, where your mind starts whispering conflicting messages. And in that internal storm, you suddenly realize discipline isn't about the market. It's about you. The first layer of discipline is simple: follow the rules. But the deeper layer, the one pros live inside, is far more complex. It's the layer where your brain tries to protect you by creating emotional impulses. Neuroscience shows that the prefrontal cortex, the part responsible for rational decisions, shuts down when stress rises. And in that moment, the amygdala, the emotional reactor, takes over. This means you're not breaking discipline because you're weak. You're breaking discipline because your brain hasn't been trained yet. This is why most traders sabotage themselves. Not because they don't know enough patterns, not because they lack a strategy, but because their brain defaults to survival mode the second uncertainty appears. This is why you see a setup you've waited for and suddenly doubt it. This is why you plan a stop loss, then move it when the trade goes against you. It's not logic, it's biology. This is where the real work begins. You must start by asking yourself why discipline collapses. Not what rule you broke, not what mistake you made, but what state of mind you were in when it happened. This is how professionals think. This is how Douglas framed the psychology of trading, not as a technical challenge, but as a mirror reflecting your internal patterns. Livermore understood this too. He said discipline wasn't a skill, it was a lifestyle. And yet, there's a strange paradox in trading that most people never see. The stronger your desire to win, the weaker your discipline becomes. Because desire creates pressure, pressure creates fear, fear creates impulsive action, and impulsive action destroys structure. So the very thing you think you need to win, excitement, passion, hunger, becomes the trap that pulls you into emotional trading. But the real professionals operate differently. Their discipline does not come from motivation. It doesn't come from inspiration. It doesn't come from hype. Their discipline comes from identity. They see themselves as guardians of their plan. They see themselves as protectors of their process. They don't try to be disciplined. They are disciplined. This identity-level shift is what Jack Schwager saw repeatedly when interviewing elite traders. Discipline wasn't something they forced. It was who they had become. Still, you're not expected to become that version of yourself instantly. And that's where the next pattern interrupt happens. The moment you think discipline means perfection, it doesn't. Discipline means corrections. It means catching yourself faster. It means recovering quicker. It means shifting your mindset before the damage spreads. This is where elders' teachings become gold. The goal isn't to avoid mistakes, it's to prevent repeating the same ones. You may think you lack discipline because you break rules during live trading. But have you ever asked what version of you created those rules? The calm version, the tired version, the stressed version, The emotional version, because your rules are only as strong as the state you were in when you built them. This is something most traders never consider, and it's one reason their discipline collapses under real pressure. And that brings us to the real pivot point. The what. What exactly is discipline in trading? It's not staying rigid. It's not forcing yourself into a military-style mindset. It's not punishing yourself for mistakes. Discipline is clarity. Discipline is structure. Discipline is emotional separation. It's placing logic above impulse. It's the ability to act based on a plan instead of a feeling. But then comes the question burning inside every trader. How do I build this level of discipline? How do I transform the way I react when the chart moves against me? How do I stop sabotaging the trades that were supposed to be easy? How do I stay calm when the market gets violent? These questions are the doorway to a deeper transformation. The shift from reacting to responding. The first step is to see discipline not as restriction, but as freedom. The freedom to trade without emotional noise. The freedom to choose when to act. The freedom to step back without guilt. This shift is crucial. Sakota showed this repeatedly. Success comes from removing emotional interference, not adding more technical analysis. A calm mind makes clearer decisions than a busy one. The second step is to create environment-based discipline. Your surroundings shape your decisions more than you realize. If your desk is chaotic, your trading will be chaotic. If your screen is cluttered, your mind will be cluttered. If your day is rushed, your trades will be rushed. Remove friction, remove distractions, remove emotional triggers, and discipline becomes automatic. But here comes the twist. Discipline doesn't always feel good. Sometimes discipline feels boring. Sometimes it feels like nothing is happening. Sometimes it feels like you're missing out while others seem to be winning. And yet this discomfort is the seed of consistency. For the disciplined trader, boredom is not a threat. It is a sign of control. The third step is emotional conditioning. You must train your nervous system to handle uncertainty without panic. This is neuroscience at its core. When you expose yourself to uncertainty intentionally through journaling, replaying trades, tracking emotions, your brain slowly adapts. The emotional spikes decrease. The panic responses weaken. The internal storms get quieter. Gradually, you begin to notice something powerful. The market stops scaring you. Your impulses weaken. Your reactions slow down. Your thoughts become clearer. You look at setups with confidence instead of fear. And you begin to sense the deeper meaning behind discipline. It isn't a rule, it's a foundation. Soon, discipline stops being a battle. It becomes a rhythm, a flow, a natural part of your presence on the charts. You enter only when your plan aligns. You exit without hesitation. You walk away when conditions shift. You manage risk with maturity instead of ego. And in those moments, even the market feels different because you have become different. This is how the disciplined trader emerges, not through force, not through perfection, not through punishment, but through awareness, identity, and repetition. Through the quiet confidence of someone who no longer needs the market to validate them. Through the steady mindset of someone who knows that discipline creates success long before the chart confirms it. And now the path begins to unfold, not outside you, but within you. The mindset of discipline is forming. The identity is strengthening. The emotional storms are weakening. And inside that transformation, a new version of you is quietly preparing to take shape. One that the market will soon learn to respect.
Over 70% of traders report that the moment volatility increases, their discipline collapses. More than half admit they changed their trading plan while already inside a trade. Over 80% enter positions they never intended to take. Almost all say emotional pressure pushes them into trades that go against their rules. These numbers reveal a truth most traders avoid. Discipline isn't lost during the trade, it's lost moments before the trade begins. There's a strange emptiness that forms right here, the gap between knowing what to do and actually doing it. This is the same gap Part 1 exposed, the gap where your mind whispers two opposite voices at the same time. One voice sounds disciplined, logical, structured. The other sounds urgent, emotional, impatient. And that conflict creates a fog inside your thinking, a subtle confusion that makes even a clear setup feel uncertain. It's in this fog that most traders abandon their rules. What traders rarely notice is that discipline is a chain reaction. It starts long before you click buy or sell. It begins in your breathing, your posture, your internal dialogue, the state your mind enters when you sit at the charts. If your state is unstable, your discipline will be unstable. If your energy is scattered, your focus will be scattered. Mark Douglas spent years explaining that trades don't fail because of strategy weaknesses. They fail because the trader is not mentally prepared to follow the strategy consistently. This is where the deeper layer of discipline starts revealing itself. It isn't just about sticking to rules. It's about engineering the mental conditions that make sticking to rules feel natural. Without these conditions, discipline becomes a fight. With them, discipline becomes a rhythm. This distinction separates the struggling trader from the professional. But here's the twist most people never see coming. Undisciplined trading rarely feels emotional in the moment. It feels logical. It feels justified. It feels like you're adapting to the market. That's the trap. The emotional brain hijacks your logic by disguising your impulses as quick decisions. This is why understanding neuroscience matters. When uncertainty spikes, the emotional brain takes control faster than you can consciously react. The moment your emotional brain takes over, discipline dissolves. You chase trades you didn't plan. You exit early because you panic. You hold losers because you hope. You adjust rules because you fear missing out. These behaviors feel spontaneous, but they come from predictable psychological patterns. Elder emphasized this repeatedly. Until you understand your emotional cycles, the market will exploit them. But the real turning point comes when you realize discipline isn't broken by pressure. It's broken by internal narratives. The stories you tell yourself about a trade, the meaning you attach to a candle, the assumptions you create before the market confirms anything. This inner storytelling drags you away from your plan faster than any chart movement ever could. And then the curiosity sets in. If discipline can collapse so quickly, how do the great traders stay so steady? How did Livermore maintain control in markets far more chaotic than ours? How does a trader like Shikoda continue to follow rules without hesitation? The answer is rarely what new traders expect. The pros don't rely on willpower, they build environments that protect their discipline. Identity becomes the key. When your identity is aligned with discipline, your decisions naturally follow it. You begin to see yourself as someone whose rules exist for a reason. You begin treating discipline as self-respect. You begin valuing structure more than excitement. This identity shift doesn't just affect actions, it affects your entire presence in front of the charts. Yet traders resist this transformation because they still believe discipline limits opportunities. They think waiting means losing. They believe fewer trades equal fewer chances. This belief destroys discipline from the inside out. In reality, discipline expands opportunities, but only for the trader patient enough to see them clearly. Without discipline, every move looks like a setup. With discipline, only the best setups reveal themselves. At some point, the internal conflict becomes impossible to ignore. You begin noticing how often your emotions compete with your rules. You notice hesitation where clarity should be. You notice panic where confidence should stand. These observations are not weaknesses, they're signals. Signals that your identity is shifting from emotional trader to intentional trader. From here, the what becomes clearer. Discipline is not suppression, it is selection. The selection of thoughts, behaviors, reactions, and conditions. Discipline is choosing clarity over urgency, choosing patience over impulse, choosing structure over randomness. It is the active removal of anything that pushes you away from logic. And then the deeper question emerges, the how. How do you internalize discipline so deeply that breaking your rules feels unnatural? How do you create a mind that refuses to betray your plan? How do you build emotional strength that stays steady even during market storms? These questions are the gateway to the next stage of mastery. The first stage is emotional awareness. Before you can control impulses, you must recognize them. Every change in breathing, every tension in your hands, every sudden urge to act is a signal. Neuroscience shows that recognizing an emotional spike reduces its power instantly. Awareness breaks the automatic loop that destroys discipline. The second stage is repetition. Discipline becomes automatic through repeated correct behaviors. Your brain rewires itself through consistency. This is how Shikoda turned rules into instinct. He repeated his processes until they felt like the only natural way to trade. What feels hard today becomes effortless with repetition. The third stage is environment mastery. Your surroundings shape your discipline. A chaotic desk creates chaotic decisions. A noisy environment creates noisy thinking. A rushed mind creates rushed trades. Brian Tracy has taught this for decades. A well-designed environment builds behavior without force. And then something subtle begins happening. You start making fewer impulsive trades. You start noticing emotional triggers before acting on them. You start taking trades that feel aligned with your identity instead of your impulses. You start feeling more in control, not because the market changed, but because you did. This is the evolution of discipline. It reveals itself slowly, quietly, through small internal victories, through the calm you feel watching a setup form without rushing in, through the clarity you feel exiting a trade as planned, without hesitation, through the strength you feel walking away when conditions aren't right. And when discipline becomes part of your character, the market starts to feel different. It stops looking like a battlefield and starts looking like a landscape, one you navigate with intention, precision, and confidence. The disciplined version of you is beginning to form, and that version of you is far stronger than you realize.
The deeper a trader goes into discipline, the more they realize it's not about controlling the market. It's about controlling the thoughts that rise inside them when the market moves against their expectations. And this is where an entirely new layer of challenge appears. Because even when you know the right rules, the right routines, and the right structure, the human mind still whispers its temptations. It tests you with impatience, urges you to intervene, and convinces you that this time you can break discipline and get away with it. The confusion becomes heavier because you're not fighting price anymore. You're fighting your own impulses. There is a moment every disciplined trader encounters where confidence turns into danger. You stick to your plan for a while, and then slowly, comfort creeps in. You begin to trust your instincts more than your rules, and the mind starts negotiating with you. It tells you that you've earned the right to take a riskier trade. It suggests that bending the plan just slightly won't hurt. At first, this feels harmless, but it's the same mental trap Jack Schwager studied in market winners who failed to sustain long-term results. Discipline isn't lost in a crash. It's lost in tiny moments of permission. This is where confusion hits hardest. You know what discipline is, you know why it matters, but suddenly your brain pulls you towards shortcuts that feel right emotionally, even though you logically know they're wrong. Neuroscience explains this as the brain's reward system, overpowering rational decision pathways. When the market moves fast, the emotional brain wants immediate action, but the disciplined trader must operate from the slower, more deliberate part of the mind. And this creates a powerful internal conflict that many traders misinterpret as intuition. There is a strange silence inside this battle. You look at the chart, your setup is not there, yet something inside you pushes you to act. It feels urgent, almost like pressure. This pressure is not real. It's the emotional residue of past trades, past mistakes, past fears, and past adrenaline spikes. Mark Douglas highlighted that undisciplined trading is simply unresolved emotional pain from previous experiences, disguising itself as opportunity. When this becomes clear, traders suddenly understand why discipline slips even when they think they're prepared. And this is where the transformation begins. You start noticing the micro signals your body sends before you break discipline. A faster heartbeat, restless fingers on the mouse, a slight tension in your jaw, the urge to stare at every candle tick. These tiny signals are warnings. They tell you that you're drifting away from your trading identity and falling back into survival mode. Jesse Livermore used to say he could feel when he was about to do something stupid long before he actually did it. He wasn't predicting the market, he was predicting his own emotional weaknesses. The real question isn't why traders break discipline, it's why some eventually stop. The answer is identity. When a trader sees themselves as someone who follows rules, who respects risk, who doesn't rush, who doesn't chase, who doesn't panic, their behavior changes automatically. They no longer try to be disciplined. They simply act in alignment with the person they believe they are. When Ed Sikata said that the trend is your friend, the deeper message wasn't about charts, it was about behavior. The trend of your actions determines the future of your results. This is where curiosity takes over. You start asking yourself, if discipline is identity, how do you upgrade that identity? How do you turn discipline into your natural state? The mind wants simple answers, but the truth is more layered. You don't install discipline like a setting on a device. You build it through repetition, through emotional awareness, through breaking old patterns, and through training your brain to delay gratification. Every act of waiting, every moment of restraint strengthens your mental circuitry. Over time, this becomes automatic. But here's the twist most traders never see coming. Discipline becomes easier when your goals become more clear. The less clear your trading mission, the more your mind will drift toward impulsive behavior. When the brain lacks direction, it fills the void with urgency. That urgency becomes noise, and that noise becomes the enemy of discipline. Brian Tracy spent years teaching how clarity increases self-control, and the same logic applies in trading. A trader who knows exactly what they're trying to achieve feels less emotional pressure to react to every market movement. Another layer emerges when you understand how the environment affects discipline. If your desk is cluttered, your charts are chaotic, your notifications are on, and your mind is filled with distractions, it becomes harder to maintain consistency. Alexander Elder explained discipline not just as emotional control, but environmental control. When your surroundings breathe order, your mind naturally imitates that structure. When your surroundings are messy, your discipline weakens without you even realizing why. And then comes the pattern interrupt. The moment the market gives you the exact opposite of what you expected. A sudden spike, a sudden drop, a reversal that makes no sense. This is where undisciplined trader reacts emotionally, but a disciplined trader observes without jumping. The first reaction is panic. The second is analysis. The first leads to losses. The second leads to opportunity. What separates the two is not intelligence. It is the ability to pause. That pause is where discipline lives. The strange part is that the mind often believes discipline is restrictive. It thinks rules create limitation. But in reality, discipline creates freedom. Freedom from anxiety, freedom from confusion, freedom from the emotional roller coaster that destroys accounts. When you finally internalize this, discipline stops feeling like a cage and starts feeling like a shield. You feel safer, calmer, more controlled, and this emotional shift changes everything. There is also a hidden advantage disciplined traders possess. They have fewer regrets. Every undisciplined action produces guilt. Every impulsive trade produces shame. These emotions not only hurt your confidence, they drain your cognitive energy. Disciplined traders experience less emotional fatigue, which gives them more mental power to evaluate opportunities with clarity. This compounding advantage grows quietly with time, eventually separating them from the inconsistent majority.
But the most surprising truth appears when you start observing your behavior from the outside. You learn to step outside your decisions and watch them like a spectator. You become aware of your impulses before they become actions. This is where self-mastery begins. You stop identifying with your fear, your impatience, your urge to chase. Instead, you identify with your plan, your routine, your long-term vision. This shift is subtle, but life-changing. And as this new identity grows, the emotional storms you once feared begin to lose their power. You stop reacting to every candle, every spike, every pullback. Instead, you respond only to your conditions. You move from chasing the market to letting the market come to you. The difference between these two mindsets is enormous. One leads to emotional chaos, the other leads to long-term growth. And with every disciplined action you take, the mind begins rewiring itself. Neuroscience calls it neuroplasticity, the brain reshaping itself based on repeated behaviors. When you consistently follow your rules, your brain builds stronger pathways for self-control. When you break discipline, it strengthens the opposite pathways. This means discipline isn't talent, it's training. Soon, a new layer of confidence emerges, not the fake confidence of oversized positions or risky decisions, but the deep confidence that comes from knowing you can trust yourself. When you can trust your behavior, the market becomes less intimidating. You stop trying to control everything. You only control what you can, and that is enough. But there is still one more truth that traders often overlook. Discipline isn't about perfection. You will slip occasionally. You will make emotional decisions. You will break rules. The goal is not to eliminate mistakes. The goal is to reduce their frequency and reduce their impact. Discipline isn't about being flawless. It's about being consistent. And when this understanding becomes part of who you are, the trading journey begins to feel different. You don't chase setups anymore. You don't fear missing out. You don't panic when the market moves unpredictably. You stand firm, grounded, patient, and focused. You trade like someone who knows exactly who they are and why they're here.
There comes a point in every trader's journey where discipline shifts from being something you try to apply into something you genuinely live. And that shift doesn't happen on the charts, it happens inside the mind. You start noticing that your reactions aren't the same anymore. You don't feel pulled by every candle. You don't feel pressured by every move. You feel grounded, almost like you've stepped into a different version of yourself, a version that has outgrown the emotional chaos that once controlled your trading. This new version of you sees the market differently. Instead of looking for excitement, you look for alignment. Instead of reacting to randomness, you wait for structure. Instead of chasing opportunities, you let them prove themselves. This is the inflection point that Mark Douglas often highlighted. The moment your beliefs finally support your actions. You stop needing discipline as a reminder because discipline becomes your default. You no longer battle your impulses, you manage them like a seasoned professional. But here's the twist few traders expect. The deeper you go into discipline, the more the market begins to mirror your behavior. It stops feeling wild. It stops feeling unpredictable. It stops feeling personal. It becomes a place of patterns, probabilities, and controlled responses. And you realize the market was never chaotic. It was your internal state that was chaotic. Now that you've created order inside yourself, you see order outside as well. This is the psychological unlock that separates the consistent traders from the emotional ones. Still, discipline doesn't make the market easy. It only makes you stronger. You will face losing days. You will encounter setups that fail. You will watch positions that looked perfect reverse unexpectedly. Jesse Livermore faced these realities his entire life. Yet his biggest edge wasn't forecasting. It was emotional durability. Discipline gives you that durability. You stop crumbling under pressure. You stay steady when others panic.
You take responsibility instead of looking for excuses. This emotional strength becomes your competitive advantage. And then something powerful starts happening. Your patience pays you. You begin seeing trades you would have never noticed before because your mind is no longer clouded by fear, urgency, or impulse. Ed Seykota approach to trend following was built on this kind of emotional clarity, the ability to sit, observe, wait, and strike only when the odds are stacked. When you carry yourself with discipline, the market reveals opportunities that were hidden behind your old emotional noise. There is a subtle moment when discipline turns into intuition, not the reckless intuition based on hope, but the refined intuition shaped by experience and emotional control. You start recognizing patterns faster. You sense market structure with more clarity, not because you're guessing, but because your brain is no longer cluttered. Neuroscience shows that a calm mind processes complex information more accurately than a stressed one. This is why disciplined traders often feel like they can see through the chart. Their brain isn't fighting fear or excitement anymore. Then curiosity steps in again, a deeper level of curiosity. You start wondering how much further discipline can take you. You start analyzing where your impulses still show up, where your emotions still interfere, where your habits still need refinement. This internal audit is something Jack Schwager identified in top market performers. They never stopped improving. They never assumed they were finished. They treated discipline as a lifelong practice, not a temporary tool. And here is where a major realization hits you. Discipline is not about restricting yourself. It is about protecting your future. Every rule you follow protects your capital. Every setup you wait for protects your account. Every emotional decision you avoid protects your long-term potential. Alexander Elder described trading discipline as a survival skill, and now you finally understand why. The market punishes impulsive traders without mercy, but it rewards disciplined traders with longevity. With this understanding, your confidence starts to grow, but not the fragile confidence built on lucky wins. This confidence comes from knowing you can trust yourself. You trust your process. You trust your rules. You trust your emotional control. Confidence built on discipline is unshakable. Even when you lose a trade, you don't lose your composure. Even when you miss an opportunity, you don't chase. You simply follow your system with calm conviction. As your identity evolves, your entire trading experience changes. The fear of missing out begins to fade. The anxiety before entering a trade disappears. The guilt after mistakes becomes less frequent. You feel lighter, clearer, and more stable. This emotional clarity allows you to make decisions from a place of strength rather than desperation. And that strength becomes visible in your results, not always immediately, but inevitably. There's a moment where your old patterns try to resurface. Your mind may attempt to drag you back into impulsive behavior, but this time you're aware. You see the signs. You notice the tightness in your chest, the sudden impatience, the urge to force a trade. But instead of acting on it, you pause. You step back. You breathe. This pause is the difference between the trader you used to be and the trader you are becoming. That single act of waiting is what rewrites your story. Then something shifts forever. You no longer feel addicted to trading. You no longer feel the need to constantly be in a position. You understand that not trading is also trading. Waiting is also a strategy. Patience is also a position. This is the moment where traders truly achieve emotional maturity. They stop looking for constant action and start looking for the right action. And that shift becomes the foundation of long-term success. Around this stage, you start noticing a silent transformation in your lifestyle as well. Your sleeping habits improve because you're not stressed about reckless trades. Your self-esteem rises because you're finally proud of your decisions. Your mind feels clearer because you're not constantly battling guilt, regret, and frustration. Discipline lifts the invisible weight that impulsive trading places on your life, and you begin to feel in control, not just in trading, but in everything you do. This newfound clarity opens doors to deeper strategy work. You begin refining your system, improving your risk rules, optimizing your entries and exits, and studying the market from a higher level. You think like a strategist instead of a gambler. You act like a professional instead of a participant. You treat trading like a business instead of an escape. And the more you refine your behavior, the more the market begins to reward you with stability. Eventually, you discovered the truth most traders never understand. Discipline is not about following rules. It's about becoming the kind of person who doesn't need to break them. You don't force yourself to act right. You feel uncomfortable acting wrong. Your identity protects your account. Your mindset protects your strategy. Your emotional intelligence protects your future. And this alignment is what turns ordinary traders into exceptional ones. And now, as your journey continues, you carry something far more valuable than any strategy or indicator. You carry the ability to remain disciplined in a world designed to break your focus. This is the skill that separates the inconsistent from the exceptional. This is the edge that outlasts every market cycle. This is the mindset that builds longevity. If you want to keep growing your discipline, mastering your mindset, and building the identity of a consistently profitable trader, make sure you subscribe to Mind for Trade. Your journey to becoming a disciplined, confident, emotionally strong trader continues here, step by step, lesson by lesson, mindset shift by mindset shift.